It's finally here. The Draft Finance Bill 2025 has been made public for Kenyans to assess whether it benefits them or not. In last year's bill, Gen Zs went out of their way to simplify the document and help others understand the new taxes that were introduced, thus leading to the anti-finance bill protests. With the new bill that was approved by Cabinet this past Tuesday, the government has insisted that there will be no new taxes. So what's in this year's finance bill? Let's dive in. The bill has focused on the restructuring of the value-added tax, meaning that certain products will be moved from zero-rated to exempt status. This includes raw materials for local medicine production, sugarcane transport from farms to factories, locally assembled and manufactured mobile phones, electric bicycles, solar and lithium-ion batteries, and animal feed inputs. To help you understand, value-added tax is the tax added to the price of goods and services at each step of production and sale. So whether it's the manufacturer, supplier, once they add value to the product, they pass the cost to the consumer. Zero rating means that the consumer won't pay the VAT, hence keeping the prices lower for essential items. This is how it works. If a manufacturer buys packaging and equipment to make a product, they pay VAT to the suppliers. If the product is zero-rated, they don't pass the VAT to the consumer, and instead, they can claim VAT refunds from the government. For exempt goods, businesses still pay VAT on the raw materials but won't be refunded by the government. They increase the final price to the consumer, meaning the product's cost will increase. So here's why it matters. When products are moved from zero-rated to exempt, it improves short-term cash flow for the government and in some cases discourages fake claims on zero-rated products.
People who claim tax refunds because they run bakeries, and we are paying a lot of money to many bakeries. But you know what they're doing? They have more accountants in those bakeries than people who bake any bread. This, ladies and gentlemen, we must have a candid conversation and stop it.
But the biggest impact is felt on the consumer, who may end up paying more for these essential items. The bill also says that if you buy or import goods that are VAT exempt or zero-rated, but then use them for a different purpose than what the exemption was meant for, you will have to pay for the taxes. For example, if a charity-based organization buys food supplies that are VAT exempt to distribute for free to needy families, then later, instead of giving it away, the charity organization sells the food at a fundraiser. Now, since the food is being sold and not given away as intended under the exemption, the charity organization must pay the VAT that would have applied if it had been a normal sale. However, the bill did not indicate the process that will determine whether the goods or services are used in the right way. We'll just have to wait and see. For more videos on the finance bill, stay tuned.